All right, welcome to Behind the Scenes at the Real Estate Podcast and Agent's Guide, where we're about to talk to Carter Lovelace about USDA loans. Okay, so I'm just going to introduce you on here, and then we're going to get going.
Yes.
Okay, so I'm going to do my introduction, and then I'm going to introduce you. Welcome to the Real Estate Podcast and Agent's Guide. I'm your hostess with the mostest, Ashley Jabora with Jabora Realty Team, brokered by Blair Realty Group. Remember, everything that we say here is for educational purposes only. Please do your own research and remember to verify rules and regulations in your area. Today's very special guest is Carter Lovelace. You're not a Lovelace anymore, are you?
Technically, no.
Oh my gosh, I just realized that as I was introducing you. What's your new last name?
It will be Villalobos.
Villalobos. Mm-hmm. Okay. Carter Villalobos, soon to be. She did just get married. I'm guessing you just haven't changed it yet.
Yeah, it's a process.
It is a process. Well, I didn't do it for the first 3 years of got married. And it was really, I was hell bent on keeping my maiden name. Mm-hmm. And I made that declaration in 4th grade. And then when we had kids, that was what I did not take into account.
That's what everyone says.
Yeah. I was
What was your maiden name?
Vanek.
Oh,
yeah.
Oh, I like that.
I loved it. Like, I was good with it. Yeah. And I was like that. I felt like so much of my identity was in that.
Same.
And that was really hard for me. But then when we had kids and I'm saying Jabora and I'm Vanek, they're like, oh, are you their aunt? I'm like, how dare you? Am I?
You're like, I didn't think this one through.
I didn't. And I'm like, okay, we're a family. I have to, I know that doesn't mean you're not a family.
No,
I know. The same last name, but like that was hard for me. So anyway, that was my decision making on that. And that's why I took some. So Carter Villalobos Lovelace is with CMG Mortgage in Cyprus. Do you want to speak on that for just a minute? Like your history in lending?
Oh, yeah. I've been with CMG for, it's about to be 3 years, in lending for almost 6, and it's been a great time. We've seen a lot of markets in those, in this time frame. So it's been interesting.
Yeah, so right now in January 2025, do you feel like you're seeing a lot of contracts being negotiated, like a lot more seller concessions than you saw during the COVID years?
Oh, yeah.
Yeah.
Those aren't even an option.
Yeah, I know. It's crazy. I'm like, buyers, this is your time. Like,
there was no inspections then. They were like, oh, we'll waive them.
Yeah, waived everything. Yeah, it was crazy. Now I'm telling you, buyers, like, this is your time, and don't let those interest rates deter you, because it is what's making it your time.
There's so many ways to structure the deal too, which it's kind of an unpopular opinion, but it's been my favorite market.
Yeah.
For buyers.
Yeah, it is a great market for buyers. It's just hard to get that buy-in when the media is like constantly 7% interest rates, they're so high. And I'm like, do you know what that does though for home prices? Like, that is your negotiation power right there. And you're not married to the rate for 30 years.
No.
Okay, so today's topic is good start. This is USDA loans. It was just 4 letters. I couldn't get it out right. So that is from the U.S. Department of Agriculture. Now, these are a less common loan type, but I will tell you, just from the real estate agent perspective, a lot of people look at this as like the VA loans for the regular, the non-veterans.
Right.
Us civilians out here.
Yes, with no down payment.
With no down payment. It's a little bit more complicated than that, and that's one of the things that's why I want to have this conversation, because they can be great loan products, but there is some more complications.
Yes.
So that's what we are going to be dissecting today. So what are USDA loans, and what makes them unique compared to other loan types?
So USDA it's a specific niche for sure, and I think that people kind of stray away from them because it's not an offer that you come across all the time as an agent, especially if you're in Cyprus. Mm-hmm. So what makes them special is it's 0 down, no MI. Rates are a little bit more competitive.
And MI, real quick, is mortgage insurance.
Yes, mortgage insurance. So there's no mortgage insurance on it. And there really are great loans. First-time home buyers, you can be a repeat buyer. There's a lot of pros to them from a lending standpoint and from the standpoint of making home ownership happen for people that maybe don't have that down payment.
Yeah.
But that doesn't make them weaker. I don't know how much you want me to go into the qualifying of it right now.
Yeah, well, the next question is going to be about eligibility requirements for it. So if you're ready to hop into that, I guess I would say one of the bigger things, well, never mind, we're going to talk about that in just a minute. So let's talk about the eligibility requirements for USDA and what are some of the income limits and like property location criteria, because this one is very geographically specific.
Yes, super. It's half of it.
Yeah.
So
and that's why it comes from the Department of Agriculture. It is for those more rural areas.
Exactly. And for Houston speaking, that would be like Montgomery, I think Porter.
Parts of Hockley and Waller.
Parts of it.
USDA.
And that's something that you can look up as an agent. Like if you're listing a house, you can go to I don't know if you've ever done it, but you can go to the USDA eligibility, type in the address, and it will tell you right there.
Yeah.
Like it's eligible or it's not eligible. So that's half of it. They are rural areas, so you're not going to find it in the city or anything, but as far as eligibility for the property, that's half of it. The other half of the eligibility is the client and the borrower. There are income limits, and it's going to be by county, so it's 115% of the area median for that county. And you can also check that on the website. I don't recommend it. Like if you had a buyer and you were like, I'm just gonna do like a quick check, that's okay, but it could be very well that website, half the time when I do it, it's like, oh, not when I do it, but when like the borrower does it, they're like, oh, it says I don't qualify. And sometimes that is the case, but sometimes that's not the case at all. So take that part with a grain of salt, but for sure the property eligibility, like that part's just, it is what it is. Like if it's eligible, you'll know, you can put it in your listing, or if your buyer's coming to you and they're like, hey, like I heard about a USDA loan, which I actually get that question kind of a lot.
Yeah.
And I'm like, you're buying in Edo.
Yeah. Montrose.
That's not a thing.
It's not a country.
It's
property.
not a thing. So that probably is like one of the biggest misconceptions. I actually and I think that's just the internet.
Yeah.
Well,
I don't think anywhere in actual just Houston really qualifies for USDA.
No.
You're really looking at suburbs of Houston.
Mm-hmm.
Or, if you live in a major city, your major city probably does not qualify under USDA under its geographic requirement, but maybe one of those suburbs do. It just depends. So you have to go to the USDA eligibility map to really figure that out.
Right. And I always recommend that to agents if they're like, I don't know if it is, I want to list it, but I want to be able to put that on there. I'm like, type that in, it will tell you right there.
Yeah.
And then whatever buyer comes your way, they can kind of figure out the other half of it. I will say, qualifying for these it's not that they're more difficult, but they are more picky. So it's the entire household income that is counted. So if you have a borrower, let's say it's the husband, and he has someone over 18 living, maybe it's his kid, that income counts.
Mm-hmm.
But it doesn't count for qualifying, but it counts if he's making income, that income counts.
Yeah.
And it could put you over the eligibility.
Yeah.
So that is something that's very crucial, especially when you're maybe on the website, because people don't take in consideration like overtime, bonuses, commission. They'll just be like, oh, this is my base salary, I'm just going to plug this in. Oh, I qualify. And then they're going to their agent and they're like, I qualify, for USDA. I have that happen more often than not. And then I'm like, let's get an application. Let's get all your docs. Let's see the full picture first. Plug it into the USDA system, and then that will tell us from there.
Yeah.
Because they are very strict with income.
Yeah.
Very.
For sure.
Probably the most strict out of, the normal everyday loans.
Right, definitely. And I think when you're trying to qualify yourself, that's where, use the USDA map to help figure out if the property would even qualify. And there's more qualifying factors than just the map, because there's loan limits. There's even, you can correct me on this. It's not to buy like a farm and ranch, really. It's really meant to be like, regular property for the most part.
I mean, you can, but it can't be income producing for like a farm.
Yes, yeah. And I think that's where people get confused, because you see Department of Agriculture, it's not to be ag producing necessarily. Maybe you can get an ag exemption for your taxes, but not producing. And that's where I think it also comes in a little bit. Like, this isn't to go get your dream farm unless you're just a homesteader.
Right.
And, that's my dream. I'm going to have a garden and I'm going to be making all my stuff. But
no one has to know if you're selling it.
At farmers markets on my own, that would probably be the best it would be. It wouldn't be anything more than that. But and then of course there's loan limits. Can you talk about the loan limits on those?
The loan limits are, it's not like the loan limits for all the other loans. It's what it will guarantee.
Okay.
So, I've never done one that was just outrageously, usually my USDA loans are like $200K. But I do know a guy that did it for, I think I want to say it was like $700. I think that's the highest I've heard of anyone doing.
Okay.
So I'm sure there's, more out there. hard, but it's kind of like VA. Like VA doesn't really have necessarily a hard stop, but it's what the VA will guarantee. So it's a little similar in that sense.
That makes sense. Okay. So now let's get into agents representing buyers. So what advice do you have for agents working with buyers in rural or suburban areas where USDA loans are more common?
So as far as what would you like to know if you had a buyer that was USDA? Like what would your questions be?
One, I am always about managing expectations with people. Okay. So I have had people call me and they're like, oh, I heard about this zero down. First off, zero down doesn't mean no closing costs.
Correct.
Doesn't mean you're getting a house for $0.
Correct.
You're just coming in getting 100% financing.
Yes.
And that's it. You still have closing costs with the lender.
Yes.
Maybe your agent. That depends on how that deal is written up. And then of course the title company. And then I guess when looking at the property, so like I'm pretty proficient in FHA and VA loans. So I can look at a lot of things and be like, okay, this is going to be tough under appraisal, that kinds of thing. What are some things, because USDA loans are not my bread and butter.
Yeah.
What are some things that agents should know when looking at property, knowing it's USDA?
So I would say USDA is kind of similar to FHA. Maybe not as strict, but they still want permanent heating. They want it safe. You know, you don't want to have some electrical box showing.
Right.
So like basic things like that needs to be accessible. So I wouldn't say that there's anything really that stands out that's just 100% different than maybe FHA, because if it could go FHA, it's probably most definitely going to go USDA.
Okay. As far as just the property requirements,
right.
like we're not saying if it's FHA approved, it's USDA.
Oh,
approved.
yes.
But
yes.
just to clarify for agents. So yeah, the government standards though of like what the property should look like.
And then, if there's a well on there, that needs to be inspected, especially if it's listed on the appraisal, septic as well.
Mm-hmm.
So just
which is
like
pretty common in those areas.
Yes. But you'd be surprised how many people don't know that you need to get that inspected.
Yeah.
So
you'd be surprised to know how many people don't know what a septic system is. So. I'm like, okay, well, your poop's not just going to be taken out and go bye-bye and paid for through your taxes with your subdivision. It's actually going to be in a tank in your yard, under the ground, but still in your yard. And you might have to get that pumped every
and
once
it
in a while.
fills up.
It does fill up. In fact, you don't want that to overflow.
Something you should know is it's for primary residences only. So just like FHA, it can't be like, oh, I'm going to buy a second home farm out here and I'm going to put zero down.
Yeah.
You can own multiple financed properties. And there's some rules that kind of have to follow with that. Like, why are you doing this? Why do you need to move? Have you outgrown your current house? Stuff like that.
I'm sure there's like distance limits and stuff like that too. Like it has to be within a certain distance away.
So it's kind of just like, why do you need a new house? So can do that.
Okay.
I've had one person, they were like, I want to buy a second home, but I want to do zero down. I was like, okay. Well, let's
Bet you do. I'd love that too.
I would love to do that. So let's see. Do you know what a C5 appraisal is? I'm sure you do. It's like the worst level.
Yes. Can I tell you a quick story on that? Never had a C5 in my life. And then I was working a HUD foreclosure property. This was March last year. And I told my buyer, because with with foreclosures, the buyer has to turn on utilities, not the seller, right? But most sellers do, but foreclosures no, because it's not owned by anybody. And and especially HUD is not taking responsibility to turn on. And I told him that, and it was $175 to get it turned on. Like you have to pay HUD and they will reimburse you as long as nothing happens. So it's a deposit. And I said, it's a $175 deposit. And he refused. And I said, look, he's like, I'm not doing an inspection, so it doesn't matter. And I said, well, it matters for appraisal. That's the problem. Mm-hmm. And he was one of those guys who definitely knew better than me. And he was like, ask the appraiser. And I was like, okay. So I was like, hey, appraiser, he does not want to turn on utilities. Can you still conduct the appraisal without it? Fully expecting him to say no. He said, yeah, I can still go out there. Okay, great. So I told my buyer that. I was like, well, he did say he can still go out there. And he was like, great, I don't have to pay it. And so we missed the window to even get them turned on. And so the appraiser went out there, and this was the first I got as a C5 property. And now they weren't going to loan money for it. And it is because he said the water, the plumbing was non-functioning, the electrical was non-functioning, the gas was non-functioning. And so now it became an uninhabitable property. And I was like, sir, what do you think I meant when I asked you?
You should have been like, I can go out there, but...
Yes, where's the but? You didn't say the but, because that's what I was trying to relay. I told my buyer, no, that's going to be a problem because those systems might be deemed non-functioning. And then the appraiser was like, yeah, you can still go out there. The but would have been a very important part of that conversation. So that was waste of money. And so my buyer was upset and he ended up having to pivot to hard money. So then he closed hard money. That's fine, except now I'm like, do you realize you're not paying $175? Now you have to pay closing costs to refinance this when you're done. It was all stupid. So yes, I know what a C5
Utilities
property is.
Need to be on too for USDA.
Yes, for any appraisal, it does need to be on, unless you are doing like a hard money loan. It's way less constricted.
Yeah.
So FYI, in case you didn't know.
I do not do those.
What bothered me is I knew it and I said it.
I just don't know why he didn't tell you.
That's what I'm saying. Like, I hate it when I'm like, but I said it, and you were like, I'll still go out there. I'm like, okay, did you just really want to make sure you collected your fee and went on with your life? And we fought it too. And then there were other things that happened that I don't want to say on the podcast, but it was, my buyer put me in a real weird pickle.
I wish you could say it, but
ask me later.
And this kind of goes without being said, kind of speaking on the property eligibility, but nothing more than a single family. You can do condos though. If there's like a condo that still follows the same guidelines as like FHA, VA, Fannie, Freddie on the condominium side, and it's in the rural eligibility, you can do it.
Okay.
So that's kind of worth noting. Mobile homes too, log cabins. You can do unique properties, but you have to have the comps.
That's the problem.
And that's kind of the problem with any unique property, with any loan, is the comparables.
Yeah.
So just be mindful of that. Just because it is eligible doesn't mean the comps are there.
Yeah, exactly. That happens too with appraisals. If you cannot find any comps for it, you do need to understand that if appraisers also can't find comps for it, this happened with my dad. I mean, he has a barndominium and they were trying to do a refi. Yeah. He was trying to do a cash out refi to build another property on his acreage, and they literally were like, they went out there multiple times. They were like, there are no other barndominiums, and so we won't be doing a refinance.
Yeah.
I'm like,
it's always the barn doors because they're so few and far between.
Yep.
But they're great.
Yeah, they are great.
That is the only problem with them is they're usually like,
which is kind of a big problem
by themselves. Yeah. So
yeah, they're great. Everyone says they want to live in them, and then because there's not enough of them, they're sometimes unloanable.
I know. Escrows too. So on USDA, you have to escrow taxes and insurance in flood if it's in a flood zone.
So that's also similar to FHA then too.
Yes.
Okay. So are there any specific steps that buyers should take, or steps that agents could take to help buyer navigate the process smoothly? So go through the map. I would say go to a lender. Do not start trying to pick and choose a property on your own.
Oh yeah, no, totally. Definitely go to the lender first and make sure that everything checks out, because we see the full picture, right? We see income, we have your documents, we see all the extra income. We can see if you have dependents, if you have people that are old enough living there, or their income will count. And most people aren't considering other people's income in living in the house, which totally blows the whole thing. And then something to be mindful of is, I feel like USDA has gotten a little bit better, because like 4 years ago, it was a slower turn time. And I don't know if it's just because they're not as busy with them. But last one I did was not long ago, and it was pretty quick. Like the turn time, pretty quick. We did do a 30-day close just in case. Yeah. So if you're an agent, maybe be mindful of that, because there is kind of like a 2-step process in it, because it's underwritten through USDA. We'll underwrite it at CMG, and then the commitment gets sent to USDA, and then USDA pretty much does like the final stamp of approval basically. And so that has not been so bad as it used to be, but there was a time that it was awful. Yeah. And so I don't know if it's just less files right now, or if they've improved their system. Yeah. Because it is the government, so I can't see that they've improved much.
I know. I'm working another HUD property now, and I'm like, here we go again. It's like giving birth. I'm like, yeah, no problem. I'll do it. Yeah. And right when I start, I was like, what were you thinking?
Like, why do I keep doing this?
Why do I keep doing this myself? I'm such a masochist. Okay, so would you prefer agents? So once when they find that property, it's under USDA, go ahead and send it to you to look at? Okay.
The property or the borrower?
Hopefully the borrower's not going to talk to you, but the property.
Yeah, I mean, I'll look at it too, but that website's pretty spot on with the property eligibility. I haven't ever had it come back, and unless it changes, like the census comes out in the middle of the deal, and it's like, this is no longer.
That would ruin it. Ruin.
On wood, but now before that happens to you.
The last census, I think, was 2010, because I don't think they did the 2020 because of COVID.
Oh, okay.
So I think they're using the 2010 census. So I don't know
Let
when
them
they're.
keep doing it.
Are they just going to do it again in 2030?
I don't
or
know
are
when
they going
they
to do
do
one
that.
like late? They do them every 10 years.
Oh yeah. Oh, that's right. I don't know what they're gonna do about that, but
I love a good census record because I use them on Ancestry all the time. I'm like, oh, there's when Grandmama came on the ship. No, y'all don't do that.
no. I want to know when my grandma came on the ship.
Get on Ancestry. It's very telling. I've learned so much about my family.
Did you do the test and like submit your info?
I did.
Okay.
I did that. Oh, yes, I did do it.
Okay,
Ancestry.
okay.
I'm just kidding.
Where's your family from?
So on my dad's side, we are. It says Jewish ancestry, which it is because they're treated as an ethnicity.
Oh.
But it's Eastern Europe.
Did you get blood for that?
Yes.
I've always wondered how.
No, spit.
Like, how do they know where we came from our spit? That's crazy to me.
Well, kind of gross, but like the more people that submit their spit from different areas,
Yeah.
they can kind of like, oh, okay,
Tag
I
them
see
all
you're more
together.
Scottish now because like we have all this Scottish spit.
Interesting.
I don't know. Scientists tell me. I kind
I
of just
know.
threw that out there. I think
I've
that's what
always
that was.
wondered though.
But like our percentages can change when you submit it to Ancestry because the more people that submit, the more accurate.
Will they
it'll
notify
get.
you? Like,
They might.
you're only
They say,
2%
like-
Scottish now.
Yeah.
We got new spit in.
Yeah, but that actually was surprising to me because my parents, or my mom actually, so my dad is like Eastern European Jewish, like very
Okay.
much so. And so that's like, my dad is over 50%, so I think I was like 30% or something.
Oh, okay.
And then my mom's side kind of harped on our German ancestry, and it was heavy Scottish. So I was like 20% Scottish.
That's cool.
So my two biggest are Czech and Scottish, or Jewish and Scottish, depending on how you want to look at that. And the thing I found out through doing my ancestry, and it kind of forces you to like I call my aunt because my mom's passed away. So I was like calling my aunt, asking questions.
Oh yeah.
My grandma never knew who her biological dad was. Like her stepdad that adopted her was just her dad, as far as most people knew, like because that was in the 20s.
Right.
You know, like no one talked about like this isn't your biological dad.
Right. Yeah. No, you just no. Yeah.
Yeah, and so she was like, no, yeah, nobody really knew that. I'm like, well, that makes sense why nobody knew we had the Scottish ancestry. It's all coming together now, why the red shows up in the sun. I get it now. And my daughter looks like she's straight Northern European. There's a little background history on me that no one asked for.
I wish I had some input.
Oh, that started because I was saying census. I love census records. I love records I find in Ancestry. So, what are some misconceptions you would say buyers have with USDA loans, and how can agents clarify them?
I don't know if buyers have the misconceptions, but for sure, kind of like we talked about, agents do.
Yeah.
But buyers, the biggest misconception, and we kind of touched on it earlier, is they think zero down means they're bringing nothing to the table and they can just buy a house with $10 in their account.
Yeah. What kind of...
I had one with 95 cents the other day, so.
Shut up.
It wasn't USDA, but I was.
Can you pay your mortgage? Okay, this is a start. We've got to get some more money in there. So what do you guys, so of course this would be more specific probably to CMG, but what do you guys require as far as like credit score, debt to income for USDA?
So great question. 580 is the minimum score for USDA. And if it's a manual underwrite, they require 620. A manual underwrite, I won't harp too much on this, but it's exactly how it sounds. It's a little bit more invasive and a lot more documents, a lot more hoops to jump through for those people.
So when do you know you have to do a manual versus automatic underwriting?
It will tell you, because when you run it through GUS, which is USDA's basically underwriting system, it'll say like refer eligible, and it'll kind of tell you why.
Okay.
So it's kind of like you kind of decipher from there. But DTI is actually really low on USDA. I think the back end is 41, where FHA is 55, and then conventional, they say 45, but you can skirt around like 48, 49. So yeah, 41, it's a lot lower.
Yeah, okay, so don't want to have too much debt as a USDA
No debt,
person,
you
and
need
more than 95 cents in the
medium
bank.
to low income. So yeah, it's just kind of like perfect storm. So that's why it's kind of hard to have like a very high property.
Yeah.
Because you have to qualify for it, but if you're qualifying for that, you probably make too much.
That makes sense.
Depending on where the county is, but
That makes sense. So
no non-occupying co-borrowers or co-signers.
Oh, okay. So
That's a
you
good
can't like
one.
put your dad on there who's not going to live there.
Yeah, I think that's something good to know for anybody, because that's the only loan really that you can't do that.
Yeah.
On a normal, between conventional, FHA, VA, VA you can't.
Yeah, that makes sense. So how does the USDA process timeline compare to other loan types, just so that we can set proper expectations for buyers?
I would give it a little more time. Like, a normal conventional FHA can whip that out in like 15 days.
Yeah.
But for USDA, like I said, they've gotten a little better, but I don't know if it's because at one point they were upgrading their system, so I don't know if it was because of that or if it's just less. And that was in 2020 when it was really slow. But I would say give them like 30 days because depending on the lender too, you know, like for CMG, we can work stuff really fast and then we can get it sent off to USDA to make sure we're meeting that close date. But I can't speak for every single lender. They might be a little bit slower. So I would just give it a little more time on those if you can, at least 30 days. Okay, you could probably do it sooner, but for those, I would give them a little more time just because there's an extra layer in there for them.
That's fair. So what are some of the challenges that buyers typically face, like appraisal issues or those stricter property standards?
I would say the biggest issue with USDA is the income.
Yeah.
Because they're so strict on it. So if you make any extra income and you're pushing those limits, like then you don't qualify. Or if you have a son that's living in there and working full time, that income counts. Yeah. So that is the hardest part, I think, with USDA, in my opinion. As far as the appraisals go, if it's livable, clean enough, it's not as strict as FHA, but I think it's a little bit easier, honestly.
Are there any like common appraisal repair requests that show up on there?
I haven't really had any weird ones. Okay. I have way more weird ones on FHA.
Yeah. Sometimes that so depends on the appraiser.
I know.
But I'm in a lot of realtor groups online, and so I just see extra weird ones because it's online. But sometimes they're like, you need to add crown molding. And I'm like, why is that a requirement?
How does that matter?
It doesn't matter. I'm like, it has anything to do with like the structural integrity of the house. Yeah, the agent was upset because they were like, the buyer's agent's now asking us to do this as the listing. How? I don't understand how this has anything to do with it. And like, yeah, agents were like, that's crazy.
I just saw this hack for crown molding and people were using picture frames, like a blank picture frame and sticking it on the wall.
Yeah.
And I'm like, that's brilliant.
Yeah. I saw people doing that for like the indoor windows. They were getting frames and putting them on like long length mirrors and putting up above doors. I was like, that's
really not a bad idea.
It's not bad. It just kind of makes everything seem a little bit bigger. But then I was like, maybe I actually do want windows. Maybe I should cut holes into my sheetrock and put windows in there.
Put windows in there. But no, I truly have not seen anything. I've seen more weird things on FHA than I have USDA. But again, the houses that I've done, they've been fine.
Yeah.
So I'm sure that someone out there has had a weird one.
Yeah, for sure. So potential closing costs, upfront fees with USDA, what do buyers need to know about? Because again, zero down does not mean, it literally just pertains to the down payment. So what other costs should they anticipate?
So USDA does have a 1% guarantee fee. So kind of like the VA's funding fee, it gets rolled into that loan amount. It's the same kind of deal. So it gets rolled into the loan amount. It's 1%
of the sales price.
Yes. Closing costs, pretty normal. I always say 1 to 3% of the sales price, but kind of depends on the lender, title, all of that. Those closing costs, there's nothing extra. The only thing extra is that 1% that gets rolled in.
Yeah. So. Now, when you're telling people what their closing costs, are you saying 1 to 3% before their down payment for like other loan types?
Yes.
Okay. So like for FHA with 3.5% down, you would say you anticipate like 6.5% potentially closing costs.
Well, I would probably say, you're probably adding them together, but yes. So like I would say like 6 to 7K.
Okay.
Which usually works out like that, depending on if the taxes are high. The escrow accounts always get a
yes, I can't encourage that enough for agents. Please look at the taxes there because that could make or break that mortgage payment.
Yes.
And not a lot of lenders do that. Yeah. Not a lot of lenders are like pointing that out, but they're like, hey, these 2 houses you sent me is a difference in $500 because the taxes might be astronomical in one area versus another.
That is something that I do with every client. I'm like, when we're walking through this, I'm making sure they're aware, especially when they don't know where they want to live. I'm like, look, you're looking in Bridgeland. This is not USDA, but you're looking in Bridgeland versus Fairfield. Those are 2 different, completely different
2 great master plan communities, but one is older than the other. Yes. And so one has newer MUDs and infrastructure.
Insurance too right now. Yeah. It's awful.
Awful.
I see a lot of lenders quoting like $100 per month. I'm like,
no, okay.
Yeah.
What are you living in, 2018?
Yes. I'm like, yeah. I'm like, okay.
Well, and it's not going to help. I mean, the California fires, that significantly impacts more than just people in California.
I know.
That affects rates everywhere. Hurricane in Florida will affect rates here because any of us on the coast, all that does to insurance companies is like, okay, there's another hurricane, rates have to go up for everybody on the coast because now everyone's at risk of getting storms on the coast. So all just more fun things to keep in mind.
I know.
And
everyone,
this isn't to deter.
Wrap your pipes for this freeze. We do not need any more claims.
Oh my God, no more claims. We are in this together, you guys.
Everyone
we cannot afford all this. Yeah, and that was one of the big things. I know we've kind of derailed a couple of times here, but that's just doing a podcast with me sometimes.
That's also my brain, so.
Yeah, mine too. So yeah, insurance goes all over the place, and I don't want that to deter people from buying a house, because if you're a renter, you're still paying somebody else's homeowner's insurance.
And that's gonna go up, your payment's gonna go up.
Yeah.
So it's gonna impact you no matter where you're living.
Yep. Exactly. It's going to impact you no matter what, whether you're a renter or a homeowner. So please don't let insurance, taxes like that deter you, because you are paying that for the landlord anyway. You just get into it yourself and see what you're paying and who you're paying it to.
Mm-hmm. You're going to feel it somehow.
Okay, so now let's talk about agents representing sellers. What should listing agents know about USDA loans when receiving offers? And are there any red flags or details to watch out for as far as like financing terms go?
The biggest one is I would just allow for a little more time just in case, compared to like a conventional or FHA these days. But they are pretty safe as long as it's a reputable lender that's kind of done their upfront due diligence. There shouldn't be anything that happens down the line. And you know, some questions that you can maybe ask that lender if you come across the USDA one is like, you know, hey, do they have funds for closing? Do they have funds for earnest money? Which sounds basic, but it does not get asked enough. And that's something that when you're dealing with these loans, it does not mean that they're just don't have any money always, but sometimes that is the case. Like maybe they have $5,000, which cover probably closing costs at that price point. Mm-hmm. So I would say allow for a little bit more time.
What about as a listing agent, when I'm doing a listing and I know that this does qualify under USDA on the map, but is there anything I should pay attention to house-wise where I'm like, you know what, this is going to be a problem in appraisal where maybe we shouldn't market it as USDA?
I would, utilities, it needs to be suitable for year-round occupancy. Safety is a big one, just making sure it's not as strict with like railings, I don't think. So you know how US or FHA's,
3 steps or more.
I would say in that sense, it leans a little more lenient on that, but just making sure it's not falling apart.
Yeah.
You know, it's not a complete just shambles.
Yeah, makes sense. So not something that if you're thinking that you should list this as handyman special, probably not USDA, FHA, or probably even VA appropriate, unless it's going to be some sort of like construction type
VA
loan.
is the strictest, so.
Yeah, they are. And again, that's not to deter FHA loans. Yeah. That is, you just said FHA is the strictest for the veteran.
No, I said VA.
Oh, I heard FHA, sorry. Yeah, and they are, but you have to. And on zero down programs, when it's backed by Fannie Mae, you have to protect it, because the whole point is to make sure if you are doing something risky like that, like not having any equity in the home, they don't want to foreclose on it.
Yeah.
I'm not really telling you that.
No, I know.
I'm telling all my fans that. Just kidding. But yeah, they don't want to foreclose on it and then there's no equity in it. That's really hard to get a borrower on it again. So they do need to make sure the home's in good condition so that when that buyer gets that property, that's not like, and we have a roof leak and the foundation's cracked, and you know, because then they're not going to be able to afford those types of fixes.
Making sure there's comparables. Mm-hmm. So even if it is eligible, make sure there are
it's not so unique.
Yeah, it's not so unique that you can't find a comparable for 20 miles. No bed and breakfasts.
Okay. Well, so yeah, non-income producing.
Yeah,
right, you said?
No income producing. Farms are okay, but just can't be income producing.
So you would just be harvesting your family.
Yep.
Okay. I've got these, thousands of maize that now we're just gonna be eating for Thanksgiving, I guess. Mm-hmm. Is there anything sellers agents can do to educate their clients about the potential benefits of accepting a USDA loan from a buyer?
Compared to like a conventional, I guess.
Yeah.
They're great loans. I mean, they really do open up the opportunity for someone to have a better rate, put less down, probably have a better monthly payment, and they are for lower to middle income brackets.
So I would say probably not necessarily like a direct benefit by like pick this USDA over conventional. But if it does qualify for USDA, you don't want to miss out on those buyers potentially. I would say is probably the bigger thing. So market it USDA if it can go USDA.
Yeah.
And then do just let your seller know that there may be a couple more hurdles, or there may be a couple more things there in that appraisal. But in general, and I have to tell people this in sellers with FHA loans, because they're like, oh, they're going to ask me to replace the roof. They're going to ask me to do this and that, add crown molding. That is not typically the case. That is not most FHA loans.
Yeah. No, yeah.
And so probably the same is to say for USDA loans, that market it, especially in this market where it is tilting in favor of the buyers, or some areas are tilting pretty heavily towards buyers, then don't miss out on that market for those types of borrowers, because they are out there. So you may limit the property by not offering it if it does qualify. Let's go to the pros and cons of USDA.
Okay.
How do USDA loans compare to other low or non-down payment options such as FHA or VA loans in terms of long-term benefits for buyers?
Rates definitely better compared to like the down payment assistance programs out there. Rates are way better than conventional. They're stricter, so that's kind of a con. They're a little harder to get, but that doesn't mean that they're not great, because if you can qualify for it, you're probably pretty solid, just because you check all the boxes. Like, you have to have the low DTI, so you already know that they don't have a lot of debt. You know they're medium to low income, but that's okay because their debt is within where it needs to be.
Yeah.
No mortgage insurance, which is huge. They do allow for a lower credit score, which I feel like they're a little bit more forgiving on that, because check all the other boxes kind of balances out a little bit. So no MI, lower rates, lower down payment. And
where are you guys at on your minimums? Like, what's your minimum for FHA, VA, and then USDA you said is 580. What is your FHA and VA credit score minimum?
It's still 580.
But your DTI can be higher.
Mm-hmm.
Okay.
Yes.
That makes sense. Okay, so kind of closing out, do you have any resources or tools that agents can use to learn about USDA loans and help their clients?
Yeah, I think the biggest tool would be the USDA, honestly, website.
Mm-hmm.
There's a lot of information on there, and if you're ever curious about a house when you're listing it, you can just plug that address in and it'll tell you right there. If you're kind of in the suburbs or smaller town, you can always check. And then maybe get with your lender.
Yeah.
Like, there's plenty, like a whole presentation on them, but we've talked about a lot of it on here. So, but yes, there are. I would definitely start with USDA website for like the basic stuff, but it depends on how in-depth, I guess, you want to get on it.
Yeah. And agents, maybe it's worth talking to appraisers too, if you can get into an appraisal class, or if you have a contact to an appraiser.
Yes.
And ask them about USDA loan appraisals, because that's the thing that I think people forget about with a lot of loans. Like, you can go under contract. It's really that appraisal is going to come out, and that's where it's going to say, hey, this doesn't qualify. Hey, this property has X, Y, and Z issues. Some of those things are going to be really hard to identify up front, because maybe it's going to be something that the appraiser put on there that might not be a normal thing. But, you don't want to go too far into a transaction where it's something that's obvious, and your buyer at this point has paid the option money, they paid for inspection, and then they paid $600 for an appraisal, and then they find that out 3 weeks under contract.
Yeah. And it could be something simple, like subject to crown molding.
Yeah, exactly. That's so stupid. That was one of the dumb
ones.
That one,
someone should have fought that.
Yeah. Another one was like painting the primary bedroom. Like, what does that have to do with anything?
I have had that on FHA.
Like
chipping paint, but they made them repaint everything.
So was the chipping paint like a fear of lead taste?
They do not like chipping paint.
No. Because those kids are eating paint chips all day
long.
long.
I don't believe that.
Snacking
I
on
never
paint
believe
chips.
that.
I have opinions on that too.
I think that they did it. Yeah.
When we go off there, I'm gonna give you my conspiracy theory on that.
Nobody was eating paint.
No, they wouldn't. Okay, we probably saw the same stuff.
Okay.
Anything else you want to share on USDA?
We covered a lot, honestly. We covered all the ins and outs. I'm trying to see if there's anything that I missed in my little notes. We hit all of it. They're great loans. They're just their own little niche. So you probably won't come across them a lot, but don't steer away from them. If you're a listing agent and it comes across as an offer, just call the lender that's on it. Chat with them, ask all the questions, find out what their credit was. If they have cash, do they have enough for earnest money? Have they been pre-approved? Is it like a true pre-approval? Has it been ran through Gus? You could ask that.
Okay.
Gus is the underwriting for USDA, just to kind of make yourself feel a little bit better, because if it's unknown to you, that could be
a high risk buyer.
Right. You have no idea. So those would probably be good questions to maybe ask lender, just to kind of get all the warm and fuzzies for it.
Good.
But yeah.
So would you like to give any sort of contact information, areas that you service?
All of Texas.
All of Texas.
But yes, I don't know, how do I do that with my contact information?
You give whatever you want. I mean, this is for...
512. No.
A lot of people do give their like cell phone number.
Oh,
but you don't have to.
Online like this? Oh, everyone can have it. Okay, my cell phone number, I feel like I'm on the radio. Call 512-924-7669 for your USDA loans and all the other ones.
All the other ones too.
Yeah.
You don't have to just call Carter for USDA.
Yeah.
Yeah, if you're in Texas, she is a great resource, so give her a call.
Even if I'm not on the deal, if you have a question, we'll literally always help. So
I love that. I appreciate that. So again, I'm Ashley Jabora with Jabora Realty Team, brokered by Blair Realty Group. We are in the Houston market. If you are looking for an agent or a great brokerage, give us a call at 281-698-0240. If you have any questions you'd like to hear answered here on the podcast, you can send those over to Ashley at blairrg.com. That's ASHLEY at BLAIRRG.com. Remember, everything we say here is for educational purposes only. It is always a good idea for you to do your own research, and remember that most real estate laws are state specific. Lastly, don't forget that knowledge is your greatest asset in real estate. Stay educated, stay proactive, and as always, keep hustling.